Hey, folks, please welcome to the show, Ryan Coisson. I hope I'm pronouncing your last name right. You're going to have to correct me if I'm not. Known him for more than 10 years. He's a digital business owner, content marketer, an outdoor adventurer, and a finance whiz. He's created high level processes, including planning and building very specific, and I mean very, very specific, actionable steps to achieve the goals around those plans. And he's just a nice guy. That's why he agreed to join me today. We spent a ski season in Whistler, Canada, living together as part of a shared chalet filled with entrepreneurs. Since that time, we have our paths kind of like cross, they diverge, they cross again. I asked him to come on the show, talk about Perfect Biz, talk about some of the different projects he's involved in, Ecom Masters, online option. We're going to start with finance, I think, because that's, yeah, my most recent touch point with Ryan, which was very quick backstory. I had quite a bit in Bitcoin that plummeted in the 2020 um, run into to lockdowns to COVID, and Ryan reached out, said something very sage, which was basically to keep cash like that in bonds because they go down less than the rest of the market, and then be able to sell those bonds and be able to buy stuff at a discount. Is that a fair summary of what you said?
Yeah, I think so. To just add a little tidbit to that, I think
Please.
anytime somebody is thinking about financial decisions, right, it always needs to be part of some greater plan. And I think that particularly for folks like us in the entrepreneur space, this is somewhat counterintuitive because we're used to stepping up to the plate and needing to hit a home run to run a successful business, to build our team, to manage payroll, all of these things. And for folks like us who've been in this sort of career path for years or decades, I got my first start in 2003. And, if you have sort of that personality, you have the tendency to want to take risks all the time. And the risks that you believe you're taking in your business are often more calculated because you control human capital. There's a lot of things under your own power. When it comes to investing in the markets, Brian, one of the tricky things entrepreneurs in particular, or folks who get enamored by an asset class, and we had just come out of a really strong bull run, right, within the cryptocurrency space. And there's a lot of arguments to be said for the validity of some of that bull run during that period of time. But one of the things to think about is everyone looks smart during the bull market, right? Understanding market rotation, understanding diversification, and overall how to manage an asset portfolio that allows you to, most importantly, as an entrepreneur, sleep well at night so that you can maintain what, in my opinion, is the most important thing, which is your earning power, right? We believe, kind of in my philosophy of investing is, especially if you're an entrepreneur, focus your business. You're taking so much risk in your business already. Focus your investment portfolio on doing things that are far less risky. And those that are risky, maybe in the cryptocurrency space, and we can define risky as volatile in this case. Make sure you have a plan of how you'll potentially manage that, right? So we can go into a whole rabbit hole here on this. And I think that, again, the overarching premise that I would always encourage folks is where you get your financial cues from, right?
Mm.
For many people, it could be their parents, it could be friends, it could be extended family members, maybe a book or two that they've read, could even be a financial advisor, right? Financial advisors can be fantastic. They can be expensive. If you do go that route, you want to make sure you find somebody with a fiduciary responsibility, not just like a general salesperson, but have an actual plan where you're getting those financial cues from and a trajectory of like, well, where am I trying to go, right, in said period of time. I think one of the traps that you had fallen into is this exuberance for the asset class, and kind of on the other side, what might be driving that currency debasement, greater economic troubles, all of these sort of things. And a lot of that is true, but sometimes the story you're following is going to have a lot of rocky roads in it. And if you can't survive those bumps, especially kind of between the ears, which is the most important thing as an investor and trader, especially, it's going to be very, very difficult for you to operate your business successfully as well.
Super well said. Yeah, super well said. So there's two threads in that. One is that like in my business or in your business, I have a modicum of control, right? Like I have the ability to fire, hire, deploy capital, change strategies X, Y, and Z, as opposed to being a passive investor in something like Bitcoin or a DeFi protocol or whatnot, where yeah, I just don't really have any. I'm purely like a spectator or retail in that sense, right?
Yeah, and
And
again, think about, in the long term, what's driving markets often is fundamentals, earnings, corporate earnings, these sort of things. The market is going to be a forward pricing mechanism. So it's pricing things out well into the future, often, 12, 18 months. There's going to be gaps within the market there's undervalued, overvalued type situations. But in the short term, right, often what's really driving market is expectation, sentiment, right? If there's a big belief that said statement from the Fed chair or something is going to weigh on the economy even more, you'll see the market move dramatically. When we've had different presidencies, we've seen a tweet cause the market to completely shift in relation to tariffs in China, right? So that emotion, that sort of overall sentiment, fear, greed, sort of drives market in the short term. But in that long term, I think more fundamentals, corporate earnings, and things like that. So when you have an asset class that doesn't have corporate earnings, doesn't have sort of these general fundamentals, and you're betting on this overarching storyline, and really, in my opinion, the main storyline for a cryptocurrency like Bitcoin, which is what this was in reference to, is that this is one of adoption, right? So the more adoption there is to that asset class, the valuer and stronger that asset class sort of becomes.
mm,
During that period of time, there was generally negative sentiment about the asset class and the validity. As the story has continued to develop now, a couple of years later, we see ETFs being approved for that asset class. We see kind of continued shaking out of bad actors within that space. We see continued development of institutional development or institutional capital, being deployed to there, where you have, pension. There was a pension fund recently that came out and said that they had deployed $100 million into the BlackRock Bitcoin ETF. Right, that adds a ton of validity to that particular space. And with that adoption, one of the things, as someone who believes that category of investment is a asymmetric bet, I'm not going to bet against Wall Street, especially when it comes to Wall Street being motivated to make money off of fees.
mm.
And now they have a very, very easy way for them to make money off the fees, which is managing your money through the ETF. Eventually, there will be other ways as well. But when you've got folks like Larry Fink behind BlackRock driving forward, I think that continued adoption curve is going to just accelerate.
Interesting. Okay. When you yeah, so when you think about your own asset allocation, let's assume you have $100 and you own a business, and yeah, you have $100 in savings, and that business is profitable. So the next month you're going to have $101. The month after that you'll have 102. Like, what do you do with that $100?
Yeah, so I think from my investing standpoint, my overall thesis is I'm playing for really two things, right? Winning the game to me looks like creating what I would call an income engine. So a portfolio that generates income for me. Now, I want that income to do a few things. One, I want it to be continually growing. So each year, I want that income to be growing. Two, I want it to be safe and stable, right? I don't want to fall into the trap that a lot of income investors, broadly speaking, fall into, which is yield chasing. So they're going to go after high current yield versus sort of maybe safety or the overall growth of that yield. Another way of saying that is dividend growth. And then I want that overall income to be sort of diversified across different sectors, which kind of falls into that stability category. But then lastly, what this really does for me, Brian, is so if your parents or my parents went to a financial advisor, now or maybe when they were our age, they're going to be given information that's okay. Let's build you this portfolio. What are your end goals and objectives? How much money do you need? Let's orchestrate this so that we've got X pile of money, like Scrooge McDuck, and now you're living in your retirement. Hopefully, your home is paid off. And now you can sell some shares of your Coca Cola or whatever stocks or bonds and live off that every month. And then all you need to do is account for inflation. So every year, take a little bit more off, and hopefully, you don't outlive your pile of money, right? This is broadly called the 4% rule, but this has just sort of been kind of the thesis for many people. This to me,
Sorry, but in that scenario, that person is selling their shares. They're selling Coca Cola. They're
correct.
selling. Yeah. Okay. Go ahead.
Yeah. So the problem to me with this thesis is that the number one fear of retirees is to run out of money, right? And if you think of from a mental standpoint, if that is the number one fear, every month or every quarter or every year, however you're doing it, you're selling and sort of killing off a little bit of the golden goose. Now, generally speaking, as long as there's enough time and the market and the economy continues to move up, this has been okay. Vanguard published a study, a couple of years ago, saying that the 4% rule needed to be addressed because they believed that over the next 10 years, the returns would be far less than the past 10 years due to inflation and other things. They are quoting out a 2% return on an annual basis, which obviously doesn't work in that scenario. But for me, it's more of a mental side of the equation, right? So rather, I just sort of do the opposite of conventional wisdom here, which is, in my opinion, often the best thing to do. And so my strategy is that I want to create a basket of investments. Now, this is specifically in the portion of my income portfolio, and we can kind of talk about other asset allocations there as well. But I want to create this basket of investments that is continuing to grow over time, where I don't value the actual dollar figure of the total portfolio as much as I value the safety, the security, and the growth of the current income that I'm
Mm,
receiving, right?
mm,
If I'm getting a 6% overall yield on my portfolio, for example, how much does that grow by next year, right? It's not uncommon that you could have your entire portfolio grow 5% or 10% by the just little pay raises, as I'd like to call them. The folks over at Coca-Cola are great people. They work really hard on my behalf. They raise their dividend. They're giving me a little pay raise, and I appreciate that, right? So that's how I kind of think about that. And so over time, that maybe starts off as a trickle, but then over time that becomes bigger and bigger and bigger and bigger. Now, the I talked before about sort of this yield trap, right? And so what is a yield trap? Because I think that this is something when someone hears income investor, they often think, well, I want more income right now, right? Which it could be valuable, right? But in reality, what we want to think about is I don't want to buy some company that's paying me a 10% yield today, unless maybe I really need that income at this very moment. I'm in my 70s or something. But if for someone in my age, I care a lot more about one, if they pay a super high yield and it's been inconsistent, it has a far greater likelihood of going away or just being completely cut altogether. That's not how I want to deploy my capital. I want safe, secure, strong companies, well diversified, and they meet very specific criteria for me. Two, I'm not looking just for that yield, right? Because I'm younger, I care way more about also share price appreciation, so the growth of the actual stock, and then the growth of the dividend. So, example would be Broadcom, right? Broadcom, we'll call it in the semiconductor space. They had been around for a long time. When I first started getting involved with Broadcom, the yield was over 5%. The share price in the last 5 years or so has gone up over 100%. The yield has come down, but the growth of the actual yield, the growth of the actual stock have been tremendous. You can do the same thing with companies like Visa, where the current yield's less than 1%, But if you look at when I was buying or getting positioned into that, the yield was much higher. But the growth of that, the dividend yield for Visa is growing at over 10% per year at the current moment. So, these types of things are really, really important to me because now flip the situation. Say I'm 70 years old, right? And I'm wanting to retire and I have a pension or something or Social Security, but I'm now instead of needing to sell shares, I have a growing income stream that grows every single year. I can use as much of that income stream as I want, or I can reinvest parts of that income stream. I have, dividends are taxed currently preferentially. So that's a strong benefit as well. But now, if I live for 5 years or 20 years, it doesn't necessarily matter, right? I'm not living in fear of running out of money. Rather, I could pass that portfolio on to my heirs if I wanted to. So it really puts you in a stronger financial position, in my opinion. And then from the mental side of things, you're not kind of living in this place of just fear, uncertainty, worry, all things that are going to make kind of those golden years far less beneficial for you, your family, your grandchildren, whatever it might be.
Yeah. So the part on Broadcom and Visa I think is super interesting because when you're looking at Broadcom, and I'm going to talk linearly, you identify it on day one, you buy it. Let's say the share is $10 at that point, and the yield is 4% on the $10 share price. I don't know what it was, but for example, and you're deploying capital into that stock or into Visa with the kind of, I would say, like two levers. You got one lever which is, right now that I think that the total addressable market or the value of the business is going to go up, so therefore the share price is going to go up, or maybe or I believe that the yield is sustainable at its current level, right? Like it's kind of one of the two, or maybe both, right? Maybe the sweet spot is both. Is that you think the yield's sustainable at its current level? They got a moat around the business like a Visa, and you think that the total addressable market's going to get bigger, more people get credit cards, credit card usage proliferates, whatnot. Is that kind of the yeah am I understanding it correctly?
Yeah, so I think there's a couple things here, right, that you think about. First off, a common thing that folks hear about is, hey, if you don't know where to invest or you're an amateur investor, invest in an index. You'll hear folks like Warren Buffett say that all the time. That is incredibly valid, right? And that is a very strong strategy for someone who's a very amateur type investor. Now, you can invest in indexes that are the S&P, which is generally what a guy like Warren Buffett mentions. You can invest in indexes that invest in overall income investments, growth stocks, that pay dividends or stuff like that, dividend growth stocks. But one of the things that a lot of people don't know, Brian, is that there's a drastic difference if you look at the results of just the growth of the S&P or the S&P with dividends being reinvested. Okay? And
Mm-hmm.
I say that because the last time I pulled up the actual stat, it was something like 40% of the returns in the S&P were based on dividends being reinvested. And
Mm-hmm.
that's significant, right? So one of the things that I think people sort of get caught up in, and this is part of to your question, is that, well, am I doing it for this? Am I doing it for that? And they think it's sort of like this either or type situation. The way that I think about it is I have sort of a criteria of I want to buy these types of companies, and these types of companies I believe are strong companies. But I want to buy them, generally speaking, when they're out of favor, right? So to go back to 2020, 2021, right? We had this big, crazy market pullback and change. And, you saw your cryptocurrency portfolio drop where you thought things would be safe and secure. We saw asset classes like gold. 2022 was the worst year for bonds since I think 1929, right? So we saw a lot of crazy things. But in 2022, for example, Exxon was up 80%, right? But when it was really beaten down, I was buying shares. And people were worried. I mean, COVID lockdowns, well, what's gas prices? What's going to happen to
Mhm.
oil?
Nobody's
All of these
driving
things are being
anywhere.
tempered back. But in my mind, I'm looking at a company that has massive amounts of cash, right? I see a company that has consistently paid dividends for years and years and years, who's raised dividends, who I believe is again a strong company who will come out of this. You look at that and compare that to something like Zoom, which during that time, initial sentiment, right? What's driving the market? That enthusiasm for that stock drove prices way up and then way down, right? Same with Peloton, right? You saw Peloton shares dramatically higher. Last time I saw Peloton was like below $4 a share, right? And so it had this huge fall from grace. Now, for me, by buying that stability, I'm getting a lot of different things, right? I'm also getting exposure to companies that I would call quote unquote like a monopoly. You look at energy companies or utility companies where they have these agreements and with the state or depending where you're at, city or something like that, and it's basically a monopoly, right? People aren't going to stop paying utilities, and in those types of situations, we can look at, well, how much does a company pay us part of that dividend, right? If they're paying us 4%, what's their current payout ratio? And there's a lot of things that, help us understand, is this sustainable? Is this something that's going to put the company at extreme risk? And obviously, something in the consumer discretionary category is likely going to need to pay you less than something in, say, the utility category, right? And now, right, I think that over the last while, some energy companies and utility companies have been really beaten up because if you think about that industry, they take on tons of debt, right, for their business. That's a natural practice within that business. And so if interest rates are super high, is that business going to be thriving during that period? Probably not, right? But if you believe in specific sectors of that space, or maybe even want to just buy an ETF, while the interest rates are high, you're going to likely get better pricing, right? So you deploy capital at what I believe are bargain prices of really strong companies. And then as things start to turn favor, right, you're benefited from. So, there's a saying, I don't know exactly where I heard it, but, and this is, I apply this to being an income investor. It's, little by little, a bird builds his nest, right? And so it's little by little over time, I'm continuing to build this quote unquote nest, this basket of companies. And within that portfolio, again, there's positions that are more designed for growth, and there's more that are designed for income. There's a balance there. But in the end, I still have that strong directive, that trajectory and financial cue to, this is what I'm going for, right? And I'm not trying to time the market. I'm not trying to, be smarter than the market, which is another trap that especially us entrepreneurs fall into. Well, I don't want to buy now because the market's going to go lower, or I don't want to buy now because look at what's going on globally, economically, right? Well, all those things are happening, yet the markets hit all-time highs yesterday, right? So it's, if you think you're going to be smarter, we got to realize again, this is a forward pricing mechanism, right? So while all of that can be the case, if you focus on being in the market, right, and just like Warren Buffett, right? He's more of a buy and hold kind of forever type person, but he does sell, and he's got over 20% of his portfolio in cash at the moment. Because of those high rates, we can get a great yield on our money and wait for good bargains and opportunities. So that all kind of ties together. Does that make sense?
Makes sense. Yeah, yeah. And what are you doing, or let's say it this way, what are you recommending? So you talked about utilities, you talked about energy. Are you changing sectors? Are you like, Buffett is famous for, he makes maybe like, I don't know, 3 or 4 buys a year. Maybe that's even too high. Like how often are you making a buy, or making Yeah, like how often are you opening up a position in a new company or shutting down a position? I don't. Maybe you don't never shut down a position in an existing company. Like how
Yeah,
much are you
it's
meddling with your portfolio in this case?
so not that much, right? So here's the thing. So first, I'm still young. I'm in my later 30s, and so I'm consistently investing every month, right? Automatically. And this isn't just like my retirement account type situation. As an entrepreneur, I have a
Profitable
retirement account that I
business.
can, yeah, through my business that
Yep.
I can, you know, put in a significant amount of money, right?
Yeah, a SEP IRA.
That type of investing is different, right? So this is also an important point that I should have mentioned before, and something for people to really think about. The type of investing you do within specific accounts matters, right? If you have a Roth IRA or you're a backdoor Roth IRA, and that money is going to come out tax free, when you're retired, the focus I'm going to have in there isn't necessarily going to be income. It's more going to be growth orientated because I've got a long period of time and I want to build that pile of money as big as possible because when I take it out, it's going to be tax free. I can then redeploy that to generate income if I want at a preferred tax rate, right? Rather than just spend it. If I've got money in a taxable brokerage account, I need to understand that if I invest in, say, covered calls or a covered call fund, which could be popular for income investors, that's generally going to be taxed at ordinary income. If I'm in a high earning season, right? Like if I'm a business owner and I'm being taxed at the highest bracket, that often may not make the most sense during that maybe period of time. So you have to sort of, I guess, think about that first and foremost, right? And I think that that's super important. And then from the position standpoint, it's been incredibly rare that I've ever terminated a position.
Mm.
The As an income investor, the primary reason I would do that is the health of the company is poor and they no longer could pay, say, dividends. So we saw yesterday, not invested in this company. I had previously been invested years ago, but 3M had a drastic cut to their dividend, right? The stock, I believe, still closed up. Generally, when that happens, there's going to be a significant change in price to that stock because income investors are going to unload it. We'll see what ends up happening with 3M, but I've only ever really done that maybe once or twice, where I've kind of completely repositioned. I may go from owning just Coca-Cola to maybe owning Pepsi or to owning both, or something like that within the same sector. But it's very, very rare that I'll kind of completely exit one thing. And so as far as looking to deploy new capital, especially when I have kind of chunks of capital, which as an entrepreneur, often we have kind of our standard cash flow, and then it can be a chunky type pay, whether you have an exit in a business or a big liquidity event or for something. In those situations, normally what I do is I'm putting that capital into something that's just super simple. At this case, maybe treasuries, right? Is generally what I'm doing, a treasury money market or something like that. And then as opportunities present themselves, I will then start to buy them. And so this is, again, comes with having your financial plan and knowing what the trajectory is. Because for me, what I've done, Brian, is I've basically created just a simple watch list of, hey, these are companies that either I own and I want to own more of, or I own or I don't own and I want to buy. But I'm looking for them to be at a
Certain
good
price.
price for me, right? And
Yeah.
there's a lot of different ways I can calculate that. I can look at, for folks who are interested, I can look at, well, what's their current yield, what's they're paying today compared to the 5 year average, right? If their 5 year average is 5% and the current yield 7%, I know that it's 2% higher, right? Or 40% higher than the average. That tells me that either the yield's been growing like crazy, which is easy for me to check, or the stock is dramatically undervalued in comparison to the last 5 years, right? Which again is very easy to check. And so you'll find that during certain periods, it's somewhat cyclical, right? You might have energy companies get beat up. You might have utility companies get beat up. Maybe companies that are in kind of like pharmaceuticals, like Pfizer or Bristol Myers Squibb or Amgen or something, Merck, they get beaten up, and you start buying. And so during different periods of time, I'm sort of acquiring more shares of a lot of these companies and still trying to think of that overall balance, right? And one of the hardest and simplest things about being an income investor is that you're often not over here fiddling and tinkering around, right? You're staying patient and sort of vigilant. You're tracking kind of what's going on, and all again with technology nowadays is also simple for us to do. But again, it's just that little by little you're building the nest, and again, since we kind of mentioned before that I do both investing and trading, I think that you have to, and it's just like I talked about as an entrepreneur and then as an investor, we have to separate these and think differently, right? An investor is going to, particularly in this case, I'm calling myself an income investor. An income investor is going to add to their portfolio, right?
Mm.
They're going to continue to build over time. An investor is looking to take advantage of short-term weakness or strength within the market and to make a profit, sometimes using some form of leverage, either in options or actual margin or something like that, and then they're looking to turn that quick profit, right? Often in a short period of time. For some people it's minutes, days, weeks, months, but certainly less than a year, most likely. And then for me, that
I
mindset.
think you meant trader for that second
Oh yeah,
second
yeah.
part.
Sorry,
Yeah,
yeah,
sorry.
sorry.
Yeah, go ahead. Yeah.
But that trader mindset is very, very different than the investor mindset, and so you can't bring either of those into one another, right? When I'm trading, I don't want to think like an investor. When I'm investing, I don't want to think like a trader. And so what I do to help that is I have separate accounts for those separate activities, right? It's just like if you're starting a brand new business, it's probably a good idea to have some sort of entity formed, separate bank account, all of that stuff. Everything's siloed and separate, right? This gives us the sort of the mental clarity for it. Same with investing and trading.
How often are you then looking at the value of your investments? Not the ones that are in the trading bucket, but the ones that are in the investment bucket. Like, how often do you look at that?
So that's a good question. So I think again, and I learned this from my original mentor, I think it'll change at different phases, but currently I don't care nearly as much of the value of the overall portfolio, but rather the income, right? So one of the
Yep.
first things, when you log in any brokerage account, they kind of make it front and center. But really, one of the first things that I do is when I log in to my brokerage account, I'm looking at the income that my portfolio is going to generate in the future, and that to me is the most important thing, right? So think back to your situation, right? Um, it's March 2020, you're cruising along, and then all of a sudden, in a week, the Dow drops 17% or something like that. We had like a big 900 point down day. We had logged the worst week in market history since 2008, the great financial crisis. A lot of people are afraid to log into their brokerage account, right? You're seeing crypto assets move astronomically faster to the downside. And there's a lot of fear there, right? There's a lot of uncertainty there. There's a lot of, for people who imagine if you'd started living by the 4% rule in January of that year, and then you just saw your portfolio down almost 20% in a week. Imagine the fear, like that gives me a pit in my stomach just even thinking about it. But when I'm logging into my account, yes, my portfolio balance is down, but my actual income was rising, right? And so by having sort of that paradigm shift, I'm now far more kind of cool as a cucumber. Of course, nobody wants to see their portfolio balance go lower, but I know that this income is strong. I know that this income is safe. And so what does that allow me to do?
But how is it that you knew your income was rising?
because you can see again. So even during that period of time, companies
Yeah.
were raising dividends, right?
Got it.
Or
Okay.
I'm reinvesting dividends at this point. So every dividend that's being paid, either some companies pay monthly, some pay quarterly. So March you're getting your dividends coming in, and that those dividends are being reinvested, so the income is continuing to rise.
Got it. Yeah. Thank you.
Yeah, but during that period, right, the biggest thing that this gave me an advantage for was now, because I also had capital on the sidelines, which is what income investors always do to have money to deploy into assets. I was able to buy stuff at prices that I couldn't have maybe bought for 10 years, or more, depending on the particular company. So it really allowed me to have this sort of almost like quantum leap forward in a lot of my positions to get companies when they were paying dividends because the price was so low. Like a energy company might have been 8, 9, almost 10% for a company that had been around forever and is super super strong. But then you had a ton of share price appreciation, and you're getting your dividends reinvested when prices were really, really low. So there was a huge opportunity. It also allowed me to play a lot of asymmetric bets. When I saw Ethereum heading down towards $100, I thought it was a good idea to deploy some of that capital there, right? And then obviously, if you're doing asymmetric bets, my objective there is to, when I have wins, to pull that capital and kind of funnel it into these income investments, right? I may leave some for asymmetric bets, some for, say, taxes, et cetera. But a lot of that's being pulled over to make more income investments, right? So if you get, my biggest asymmetric bet was over 150x. So, if you're putting smaller amounts into those types of investments, but if you're getting ginormous returns, the ability for you to rotate there is incredible.
What was that 150x bet? Just out of curiosity.
It was a crypto
Play.
investment.
Yeah.
Yeah.
Yeah. Super interesting. Okay. So I want to shift here just slightly because I think that I was, as a side note, I was working on a piece with one of our writers yesterday about the difference between being rich and being wealthy, and
Mhm.
the definition for wealth is effectively being an income investor, and that you can live off of your the income that your investments produce. Right? You're above your burn rate, for lack of a better way to put it. So you bring in 100, you spend 90. At the end of the month, you're going to have another 10 that goes into that that can be reinvested. And I'm trying to make it simple for folks. So in your case, as you've gone through business and your career, what was the point at which you became wealthy? And what I mean by that is that that you were able to live off of your income investments. And because I assume you're at that case, but when did that happen, and how did it shift your when did it happen? How did it shift what you spent your time on?
Yeah. So, I mean, I don't know that I could pinpoint a specific day looking back. My career has had a lot of different paths. I had gone very deep into the world of building websites and media type content websites. I've managed a big team of writers for stuff like that. I've moved and gone all in on the e-commerce space and moved to Asia and spent time with a business partner building offices in the Philippines and China and I've gone and built information businesses starting back in 2006 that was related to everything from study guides for college to rock climbing to potty training to ecom to investing, all over the board. And, I think one of the things that I will say is I felt the wealthiest years and years and years ago, right? I can remember getting, for a very short stint, I did some client work. And I remember the first client I ever had paid me $12,000 upfront for this project, and they were doing boat rentals, and I added six figures to this guy's business top line in a month, and he was ecstatic. And I was like, that when that happened, and I immediately was like, wow, I now have a skill set that can control sort of my destiny, right? I knew that I would never not be able to earn money. I started trading in 2003. I'm still doing that 2024, right? There were some breaks in between there, but to me, it's remarkable that something that I learned over 20 years ago and have been kind of optimizing throughout time has continued to be something that I'm doing today. And that longevity to that skill set has been incredibly empowering. And it's one of those things, Brian, where if you think about, I hate to throw numbers out because it often gives people the wrong idea. But when I first started with trading, I tripled my money. So 300% on my money in 90 days back in 2003. This was probably one of the worst things and best things that ever happened to me because instantly I thought I had the Midas touch, right? I thought I could never fail. And I had to learn a lot of lessons the hard way and kind of through the beats of life, understand what it is to be a trader and to want to be able to do that in the long term. Now, thankfully, I'm still here, right? I survived those mistakes and I did it early enough to where the amount of money was, very, very small in comparison to what I'm trading with now. Then I look at, the market had been kind of choppy, and then we had a really strong bull run towards the end of last year to the beginning of this year, and now we're at, new highs again. Well, during that period of time, trading was going incredibly well. And I had returned another triple digit return in a matter of a few months. And now this is on my entire account, right? Not just on, a few trades. And so, and I'm doing this in a very, very disciplined way where I'm not trading, generally speaking, with more than 10% in any trade. I have very specific stops. I don't have more than a certain amount committed to the market at any time. But it was just a great season. And, one of the things that, and I say that is because for the last month and a half, 2 months, I haven't been doing much trading at all. And the reason is the market shifted, right? It had started to pull back and there was more intraday volatility, and I didn't see a ton of great opportunities. And I bring this up because I think being wealthy is being in a place where you don't need to do the thing that you do to be able to live and survive, right? So because I believe that very few people should just be a full-time trader, right? They should have some other source of income. Unless you want to go work as a trader, being a trader for yourself and managing your own money is often very different than somebody might imagine, right? I'm making a few trades a month. I'm not, sitting in front of my computer watching the market constantly. So, yeah,
Yeah,
fire
but
away.
I think that because there's an important point there, which is that if you are in your own mind a full time trader, then you sit at the computer every day, or you at least think you should be sitting there doing something, right? And it doesn't matter what the season is of the market sentiment. Generally speaking, like you, as you said, taking a couple months off because you're not a full time trader, because it's not yeah, you're not implicitly committed to it, for lack of a better way to put it,
Yeah, I
right?
think that it's a mindset, right? So for me, I think of these habits of a winning trader, right? And that's something I try to impart on the students that I help with this philosophy of trading. Is one of the habits of a winning trader is, knowing when to trade and basically not to trade, right? And so we don't want to force the trades. And so I'm just because I'm not trading doesn't mean I'm not reviewing my watch list and doing the things that I should be doing, but maybe the opportunities don't seem as good as they were 3 months ago. So by having the ability, having other, passive income streams, whether it's from dividends or businesses or whatever, a business that pays me a salary, et cetera, all of these things, I don't need to make trades today to eat, right? And I have a large portfolio of investments that helps me generate income. I've got other businesses. And I just have structured my life in a way to where I'm setting myself up for success. And I know one of the biggest issues that most traders face is over trading, right? So if I know that out the gate, what can I do? How can I build sort of a fence around the idea of over trading and keep myself away from it, right? And there's that comes with all of the kind of protocols or rituals that I have as a trader that I try to teach people, because I think again, if you are the one who's managing your own money, you should care a lot about that. But you also need to be indifferent about the result you get as a trader. So you have to build in sort of protocols that protect your emotions, right? As a trader, the most important thing you have is between your ears. And really, it comes to not just like your mental acuity or things like that, it's your confidence. So if you are trading in a very volatile market, but your strategy lends itself to trading in a trending market, your confidence is going to be eroded very quickly because in volatile markets, we have this whiplashing. You're maybe used to this or sideways trending. And so if you kind of bring the proverbial hammer to try and screw in a screw, you might be able to get it into the stud, but it's going to be a hell of a lot harder than using a screwdriver or a drill, right? Does that make sense, Brian?
It makes sense. So then what does your day look like? So what I mean is when you wake up, yeah, if you start, what does the first couple hours of your day look like? Because if you have this time flexibility and this wealth, and I use it in kind of air quotes, that allows you to decide where to spend your time. Like, how do you spend it? Like, how do you decide where to spend it?
Yeah, I think there's been different phases of my life. There was a period where I was full time, like traveling all around the world, visiting all sorts of places that I only ever dreamed of visiting, and sometimes even taking family members to. My mom loves Disney, so I took her to Singapore and to go Universal and go see Disney in Hong Kong and just experience something that she'd likely never experienced. And that's one of the great things that money can provide. You know, those experiences were awesome. I think there's a dark side to the digital nomadic life that I think a lot of people didn't really used to talk about. I think more now. It can be a very lonely experience. It can be very sort of disheartening to see different parts of the world that are beautiful experience tons of poverty or to experience tons of pollution, to experience other heinous crimes and acts and things like that, and kind of it changes your perspective on a lot of things. And I think pros and cons to a lot of that. But the isolation can be one thing that I found myself falling out of a lot of habits and sort of routines that I prefer. So when I came back to the United States, I really, and I have been continuing evolving this, but I spend a lot of time outdoors. I spend a lot of time with my dog, going on hikes. I'm a big rock climber, kind of, I still have that adventure spirit. So I'm doing a lot of that stuff. But on a daily basis, I have sort of a routine of I may spend 30 minutes to an hour throughout the day cumulatively for my trading. Sometimes it's less, rarely ever more. I spend a lot of time writing now, reading. I'm working on sort of getting a bit reinvigorated into to being in sort of the publishing information business, which I kind of had stepped back from after we got out of our e-commerce businesses. But yeah, I mean, it varies, and I think one of the pros and cons of being an entrepreneur that has that flexibility and maybe you don't have the absolute necessity to be driving hard is giving yourself a little bit of grace and empathy to kind of wander a bit and figure it out more slowly than wondering what's wrong with you or like I'm sad today, like I shouldn't be ever sad, like oh, that's not the case, right? That's okay to kind of be sad or hang out. And, I've long gone from the days of like, oh, I used to feel bad if I was like watching a movie during the day because I quote unquote should be working, right? According to who, and I think everybody has different goals and there's nothing wrong with people being driven to success. And at a different stage of my life I was, and maybe I'll be back to that at some stage. But at the moment, I'm kind of more at a slower pace of quote unquote, like living that somewhat semi-retired life of still working, but not working as nearly aggressively as I was in the past.
And you had said at one point, I think in a mastermind that you and I were in, that you were also consciously cultivating friendships outside of the entrepreneur space, right? Like,
Yeah.
trying to get away from other business owners for
Yeah.
a variety of reasons.
Yeah. I think for me, like a lot of people who are entrepreneurs and have been doing their own thing for an extended period of time, it can be isolating, and you can live in a world where people are always talking about the future and bigger and better things, and all of that is fantastic. Like, I love to dream, but I also like to be very grateful for what I've already done. And I think, and again, I don't know exactly where this stems from, but for me, when I was spending a lot of time with maybe only entrepreneurs, I started to minimize a lot of what I had done and feel bad about the fact that I didn't want to really be pushing as hard moving forward. And that put me in sort of a negative mental space, and sort of a somewhat of a downward spiral that was honestly quite challenging to get out of mentally for me. By putting my energies into spending time with people that are more maybe within my hobby range, whether it's, golf, disc golf, hiking, rock climbing, just adventures. I love to cook, all these things. I found that when you're doing something like that, take rock climbing, for example. If I'm rock climbing with friends of mine, I'm not thinking about anything else, right? I'm not like sitting there wondering like, oh, like how's that company doing, or something like that. I'm very dialed in and focused on that. And so getting out with those types of friends has been incredibly valuable, cultivating that, making specific trips and destinations to do those types of things. I really enjoy photography. One of the things I love about photography is the fact that it forces patience. I'm a big landscape photographer. And so I'd go to Moab, might be in Moab for a few days or weeks, and you might go to the same spot day after day, hoping to get the right lighting, the right, everything, clouds and stuff like that, to get one photo or what you like as the one photo. For me, I don't even basically share those or anything like that. It's just kind of for me, but that sort of practice is was very, very healing for me, and soothing. So yeah, I've really enjoyed kind of getting lost in those types of things. And I find now that I'm kind of on a balance side of it, where I enjoy doing a lot of stuff with entrepreneurs, and a lot of my close entrepreneur friends kind of have been the ones that are sort of starting to encourage me to get myself back out there doing some of the things that I'm very excited and passionate about. But I've been a bit hesitant, right? I've always kind of been much more of a behind the scenes business builder. And the way that things have sort of shifted in the last several years, as well as kind of how I see the direction of maybe teaching more of what I do with investing and trading, it seems to be much more of a forward facing type brand, which is honestly a fair bit of a stretch for me and my personality.
Yeah, because you're going to wind up being public facing, using the skill of writing, using the business skills and the traffic skills and the marketing skills that you've got, and doing it in a way that, how do I encapsulate this correctly? Like, doing it like you're going to wind up back in business with it, right? Like, it's not going to be a it's not like you're getting into creative writing and you want to go off and write a novel about the American West, or
Right.
about like James Michener novel about Southeast Asia, or I don't know. Like, the writing is going to be in service of teaching skills around money and asset creation and marketing, as I understand it. Right. Well, yeah,
Yeah,
the
and I
last two,
think
I don't know. It's like it has to do with options and selling covered calls potentially, but just generally thinking about finance. Is that right?
yeah. So a lot of this. at least initially, is far more about the investing side of things, the trading side of things, and really I think it's a way of thinking. And part of like I said, I spend a lot of time reading all sorts of books. Like I just like all over the map. But one of the things that I have always kind of asked myself is if there's so much information, right, about being a successful investor, just letting time do its thing. Yet we look at the fact that most people don't have enough money to retire. They're not even close, right? And what causes these things, right? Well, a lot of it is people delaying it, not knowing what to do, sort of the fear, terminology, which is often said that the system is designing it that way so that you turn over their money and they can get management fees. I think it's part of that, but I think that some of it is just different, right? And when we learn anything new, any skill, there's complexities and intricacies that we don't necessarily understand. And if we don't spend the time to learn and educate ourselves on that, it becomes more and more challenging for us to kind of live within a world that requires that skill. And I think one of the reframes that has dramatically helped me, especially as far as putting myself out there, which for people who aren't a creator, who don't write or who don't make content, it's sometimes hard to imagine the reactions that you get, or how people interpret things and how that may affect you, because you may often think that the person isn't affected by what you say. I can tell you that I have had a tendency in the past to be more affected than I should have by positive and negative comments. But I think that this reframe
You're
of
a sensitive guy. Don't let anybody say you're not a sensitive guy. Yeah, go ahead.
I think the reframe has positively allowed me to realize that I have a lot of experience and knowledge in this space. For the thousands of students that I have been helping without really having to put myself out there, just based on my existing business that I had, the response has been tremendous and the feedback has been tremendous. But I think that I'm able to add life and a new dimension to a world that is often felt stale and complacent. And part of my hope is that the writing and the content that I'll be creating more and more of is going to allow people to kind of catch that vision and excitement for sort of the possibilities that are ahead. And that's sort of the same vision and excitement I caught when I was 17 years old. The same reason, right? I think back to, we've known each other for a long time. And broadly speaking, my general personality is a little bit more reserved and, introverted.
Quiet. Yeah.
If I were to tell you when I was 17, like I flew to California for my first event that I'd ever was going to go to, it's where I met my first mentor, who later sold me his business, that I went there by myself, like this is 2002 or 2000, early 2003. And I had nowhere to stay. I didn't have a credit card. I just went and it'll get figured out. Right. And it did. Right. I literally everything just unfolded, and I put myself into a very uncomfortable situation of not knowing where I was going to sleep, not really having a ton of money for food. Like I was willing to just sleep in the hotel conference center, right? Like I didn't care. And that's how excited I was about like this new world, this new understanding. And, I'm like coming back to that feeling, right? I remember like the moments as I've been kind of writing about some other stuff of like, oh, the moment I'm sitting in this like dimly lit fourth spare bedroom on the lower level of my dad's house and using this massive Dell computer, like logging on, and it's making this horrendous noise that we all remember from dial-up connections, and hearing that you got mail, and then logging into the now defunct Options Express and transferring that first $1,000 into my brokerage account, money that took me a while to save up. money that I sacrificed some of my prized possessions to sell so that I could have that money, right?
Mm.
And thinking back to like, what was it like when I was literally almost trembling as I'm like hitting the enter key to make that transfer to start that journey, right? And realizing that we live in a whole new world now and misinformation is more rampant than ever. The more I talk to my entrepreneur friends like yourself, the more I realize that sort of a steady hand, a steady voice to provide financial cues and sort of proper trajectory is needed. And these are
Yeah.
very, very smart individuals who are missing some of the most essential and just basic understandings of the market. And it's dramatically for a high earner, the mistakes are even more compounded.
Yeah.
And I think that, now I see it as sort of a disservice to not do it. And so I'm excited about it.
Yeah. Yeah. I can say that. Well, I mean, a couple of things I admire about you. One of them is that I think you have a perspective on time that I think you have a perspective on time, and then you actually put into action that perspective on time in an intelligent way that is quite admirable. A lot of people, myself included, look at the math, go, yes, we should be doing this. It's not happening. Like, let's try to make it up in some other way by taking a higher risk bet because I'm good at high risk bets in other areas, or at least I think I am. But more importantly, the sort of like the rituals and the rhythms, and I don't mean to use two R words in a row, but the rituals and the rhythms around what you're doing and why, right? So like you're very conscious about what season of life you're in and what you're doing and how it. That's why I asked you how you kind of structure your day to also get a sense of what you've had this journey for. But yeah, 20, 21 years sounds like from when you first flew to California, and you've got a lot of experience. And you got a lot of people who go, "Hey, Ryan, this is one of the reasons I reached out to you. I was like, I'd love to talk with you because I know you know a lot about this, but you're also not super public." I was stumbling around on PB Code asking you how I signed up for your newsletter because I couldn't couldn't even find the opt-in box because there isn't one actually, and so that's what led into this this conversation. So I think it's a beautiful transformation you're going through. And is there space in this transformation for like a lady, a family? Like it's all been very left brain business oriented. What and hobbies? Like what's happening on the questions of the heart?
Yeah, for sure. I think if the right woman comes around, it makes sense. That's definitely something that I want. I want to have a family and kids. Obviously, I've got my dog right now, so he's treated in high royalty at
Yeah.
the moment. But yeah, for sure. I mean, I came out of a serious relationship a while back, and I sort of gave myself permission to kind of heal from that, and I think kind of work on myself and look for the right relationship rather than just kind of trying to jump into another relationship. And so, I
Income
think
investor 101 right there.
no, I think especially with the matters of the heart, I think our emotions can sometimes get the best of us, right? So, I've in the tendency in the past have tried to move too quickly into new relationships, and I think trying to learn from that lesson. But to go back to what you said about time, I think time in the world we live, everybody thinks so much about like how much we're getting done. A lot of it sometimes is unnecessary things. There's a new book. I haven't completed the whole thing, but the premise is, in the title, it's called Slow Productivity by, I think his name's Cal Newport.
Newport.
But generally speaking, the idea is very simple, right? If you look back at some of the greats in time, an Einstein or Benjamin Franklin or Jane Austen or something like these writers, and you think about, well, they created these seminal works, right, or these seminal inventions, or this just had a tremendous impact. But if you look at an extended period of time, they weren't producing a lot all the time. right? There were these seasons, or there were, a 10-year period that might have went by, and five, best-selling books that have been around forever from that period. And I started to think about that. And, a friend, Andre, who's a brilliant writer, his name's Andre Chaperon, somebody I've looked up to for a very long time, had recommended that book to me. And, I just sort of thought, that's kind of how I've always like thought about my life. Like I don't want to create all of these little things, all these little fires. I want to think like, okay, what's the project I'm going to focus on? And so, during COVID, I really sunk my teeth back into a e-commerce business, and my focus was to grow that e-commerce business in a very specific intent, and I like was all in on that. And my all in wasn't working 10 hours a day or anything like that, but like that, my mental focus was really driven on that. And I think from a project standpoint, can make a lot of sense. But to bring this back to the investing standpoint, and again, those financial cues, and to where we originally started with the Bitcoin price coming down, one of the things that I talked about there is by having kind of your asymmetric bet bucket, right, is what I would call that investment. And if we look at, again, like the two main assets in that space, say Bitcoin and Ethereum, right? If you believe in those assets, you know, the idea should be that you have your buckets, and anytime there's weakness, and especially severe weakness, if you have the capability, you add to those buckets,
Yeah.
right? And if you have been doing that since, I bought my first Bitcoins in 2013. But if you had been doing that for any extended period of time, or maybe even into the future, you would have done insanely well, right? The fact was, all you had to do was wait and have the mental fortitude to not sell when everybody said you were an idiot and that Bitcoin's dead and all of these sort of things, right? And will that continue to play out? I don't know, right? But I do have those buckets, and I'm waiting, and just continue to wait, right? And I have a plan in place of how I will start to um, rotate out of that asset class at specific prices. Because at the end of the day, like, if you have a certain amount of money, like maybe you want to do other things, right? Maybe you want to do charity work, or maybe you want to take your family places, or maybe you want to buy a mid-century modern home, or whatever it might be, restore
Mm.
something. So the investments are there as a tool for me, right? They're not just there to build some big old pile of money. These are tools.
Yeah. There was on the Bitcoin, when you and I were talking about this in 2020, you also gave the advice, and we didn't really go into this, but that the asymmetric bet as a percentage of in my case, my overall portfolio was too big. That was also part
Yeah.
of it, because I think that when you're talking about this, when you had a one that did 150x, it's not a, maybe it is, I don't know, but it's probably not a let's say it's less than a 5% of your total overall
Right.
investable capital, right? And so, how do you think about that? How do you think about what is appropriate position size?
Yeah, the nature itself of an asymmetric bet is that you're able to put much less than maybe your normal position size into something. So, like, for example, like an income investment, if I have $100,000 and I'm wanting to divide that up, I might buy, call it 5 grand or 4 grand of 20, 25 different companies, right? So I'm spread out, and I have sort of this diversification. Maybe my objective over time will be, I don't want to own more than 2.5% of any one individual company. Um, that's kind of where I fall on the income investment side.
Hmm.
But then, say, from a um, asymmetrical
Asymmetric bet.
bets
Yeah.
side, I might say, okay, here's my overall portfolio. I feel comfortable having 2% there, 5% there, 10%, right? And this kind of may change. You may have to do it based on what your actual cost basis was, because as prices rise, some of these can get dramatically out of whack, and maybe it'll be assigned to trim off some of those profits, which I have done over the years. There have been benefits as well to selling losers for tax loss harvesting in the space as well. You can also buy those assets back. At least during these times, there has been no wash sale rules for this asset class, so that's a benefit. But again, everyone's tolerance is going to be a bit different over time because of sort of the growth and because sort of the other income streams I have and how I've kind of positioned myself personally, financially. I have started to allocate more funds to specific things. For example, now inside my retirement account, I have exposure to both Ethereum as well as Bitcoin within there. I believe that over the long term, I will have a much higher probability of growing that capital significantly. But I still also own, index funds in that retirement account, right? So there's a balance there. But I think no matter what somebody decides makes the most sense for them, they should have a plan and an understanding of what that actually means for their overall financial situation. And I think part of the plan that most folks miss is, when am I going to sell? And for some things, like if I own a stock, say Coca-Cola, maybe I don't ever plan to sell Coca-Cola, right? But if I own Bitcoin, Ethereum, Binance, some other token or cryptocurrency asset, at some point, if I own a whole pile of these, some of them I know are not going to be around forever, most likely. So I'm looking to play them for a pump. And then maybe I will take a 5x or a 10x on something like that and move it into those profits into Bitcoin. And then maybe I'm
Or into
hoping Bitcoin will
Coca-Cola.
double, right, over X period of time, right? And so you can look to grow your money asymmetrically multiple ways, right? So it's like, if you think about that 150 plus X, I don't want to, I think the exact number was like 165 or something, but I don't want to misquote. So we'll just call it 150. But if you look at that, and then if I were to take those profits and put it into something that's undervalued, right? You think about the compounding of that, especially over time, right? And the nature of how I look at asymmetric bets is just like a venture capitalist would. If I buy 20 companies, maybe 80% of them don't work, but 20% do. But the gains are so big that you're able to compound this money very, very quickly. Now, my objective is to be a lot higher hit rate than what a venture capitalist would be, because I'm betting on an asset class that's rolling through momentum. And I bet the way that I think about this too, Brian, is not just like so many people think I want exposure to this market, cryptocurrency market. Well, I can buy Bitcoin, Ethereum, et cetera. I also bought Nvidia, or I also bought Taiwan Semiconductor. I also bought, Silvergate Capital before it had gone on under, and I made a 10x plus on that company before it ended up going under, because I had a plan for how I was going to sell, right? Versus like watching it go up and then crater off, right? I invest in Bitcoin miners like CleanSpark or Riot or Marathon, right? And so you can get, I'm a shareholder in MicroStrategy, right? So you can get allocation in lots of different ways. And if you look at some of these stocks, you'll see that they can be more volatile, but the prices over the last, say 5 years, or especially the last several years, have gone up dramatically in comparison to maybe the broader market, right? So you're getting that asymmetric bet return, and it's not, say, something like just buying, some meme coin or something like that.
Yeah, makes sense. What do you think about Google now that they announced their dividend? Do they fall into your
I think
income investor bucket?
they don't. You know, I think it's interesting that we're starting to see companies like Google and, Meta and stuff paying dividends. It's a trend that is sort of unsuspected, unexpected to see tech companies actually start to pay back shareholders, because generally speaking, those companies just reinvest so much money back into R&D and into the business itself that it doesn't make sense for them to pay out a dividend, let alone they have massive growth built in. So it'll be interesting. The dividends are far too low to be of interest, and One of the biggest things I look for is sustained dividends being paid. I have exposure to these companies through index funds themselves, but I'm not counting on them being great income investments anytime soon.
Got it. Okay. Cool. Let's wrap here. What do you want out of this conversation, people that are listening to this? Do you want them to go to PB code? Do you want them to go, what do you want them to do? Like, you want them to wait a
Yeah, I mean, I
month?
think
You want them to like circle the wagons on you on Twitter? I don't know if you're actually active on Twitter. Like, what do you want them to do? Yeah.
not active on any social media at the current moment. That may change in the future. I think the first thing I would love
Well,
people to
first,
do.
for all the ladies, I think you need to be sending Ryan emails. That's what I would say.
Well, the first thing that I would recommend people do is to take a moment and actually think about their current financial situation, personal financial situation, business finances, et cetera, and come up with some sort of idea of like what they're wanting to actually accomplish. I think that you know especially if you're a bit older and you haven't done this in a while, it's a really really good idea to see where you're at. There was a marketer kind of disappeared, a little like Howard Hughes esque, named by the guy by the name of John Reese. And I remember,
I know
he was
him.
this legend in the
I knew
space.
him. Yeah. Yeah.
Yeah. The legend in this space, big domainer early on, bought tons of great domains, sold some of them to really big companies, owned a ton of single word domains, but he became sort of notorious in our space for being the first guy to do like $1 million in one day through a information product, and that was the 4 minute mile. And John's story is incredibly interesting to me because I remember it was a video of his that I was watching, and or maybe he was telling me I hired him for some consulting at one point, and you know he had talked about his early days and the amount of stress he had. He was living in a shitty apartment shared with some friends in his bedroom, like really down on himself, like what a loser I am, like I'm massively in debt. I've tried all of these ventures, everything is not working out, and I mean, just credit card bills in a shoebox. And he said, I decided one day to sit down and just figure out how much of a loser I really am. And totaled up, pulled out every credit card statement, right? Totaled up everything that he owned, right? And this is again, like, I think the 90s. So it's like you're not just going on to chase.com, right? Like he's digging through everything and looking at it. And he wanted to know like how big of a loser I am. Right? And that to me just it made me chuckle just like you just did, right? And he's being sort of facetious to himself because he figured it out. And then once he knew the number, the boogeyman was gone, right? Because before it was just arbitrary, like, oh, I don't know this exact amount, but I know it's overwhelming and it's on my
That's
mind all the
bad.
time, and
Yeah.
it's bad, right? And then he built a plan, right? And things took off, and John went on to have a tremendous career, and I believe he's still building successful businesses, just sort of in private. And so I think you should do the same thing, right? You should figure out, well, what kind of position am I in? What does my personal financial statement look like? You don't need to create some traditional P&L or something like that. And you don't need to make it too complicated, but just get a sense of where you're at. I think that that's so important because then you can kind of decide, well, what do I want to do about this, if anything, right? Not everybody needs to, or maybe, wants to. I guess needs to is probably the wrong way to say it. Not everybody wants to. Well, most people need to. But if what I've said resonates, I'm going to be doing a lot more writing and releasing trainings and content on onlineoption.com. People are welcome to kind of follow along. Presently we send a ton of content via email to our students and members. We're going to be doing a lot more to folks who are not students and members, and making it we're going to be actually using our marketing skills to allow people to opt in and and learn about what we're doing. But yeah, if you're looking for sort of a strong and steady voice and opinion on what's going on, in my world of investing and in my world of trading, and why I think it's important to be a long-term investor first, to build the pillars of that before you turn to any sort of other types of investing or trading. And yeah, we'd love to share that with you.
So I do have one more question because you touched on something with online option very interesting to me. So you, when you're going through this process, what does this look like? Do you sit down with a spreadsheet and you basically say, "Here's my how does this look like?" You sit down and you go like, "Here's my monthly income statement, and it's from your business, it's from your different investments. It's you look at your outgoing, your incoming. How do you do this? Like, what is it? And assume that you're a business owner, right? You're not working, you don't have a salary, but like, assume that you're a business owner. What do you do? Like, yeah, you start from what do you do?
Yeah, I mean, the first step is if you're a business owner, then I would create a little bit more of a traditional P&L. Like, what are your assets? What are your liabilities? And think of it from the personal standpoint first, right? So what assets do you have? Do you have a retirement account? Do you have this brokerage account? Maybe you've got a health savings account. Maybe you've got some cash in the bank. You've got money market, whatever. What does all of that look like, right? And then what are your expenses look like? And figure that out. I think early days for someone who hasn't really done this kind of stuff before, there's strategy to play some offense, play some defense, right? Anything on the defensive side, like you might look at your expenses and go, okay, I've pay $180 a month in streaming services, right? Like, do you need that Hulu account? Maybe, maybe not, right? Anything that you want to trim off. I'm not a believer of like scrimping. Like, I'm not someone who's going to sit here and say, oh, don't go have that coffee. I live here in Texas at the moment, and yeah, everything here is more and more expensive, right?
Mm-hmm.
It's just, and so, but it doesn't mean that I'm not going to go pay $8 for a matcha latte. Still going to do it.
Is that what a matcha latte costs right now in Austin?
$7.95. That's crazy. But yeah, so I would start thinking about offense and defense, right? And some simple buckets, right? If you're a business owner and you don't have some sort of business retirement account, obviously a great thing to do there is talk to your accountant about, well, how much you're paying yourself from. I think everybody who owns a business should probably be paying themselves a legitimate salary from that business if they can. And then obviously dividends or distributions or something, if depending on what's going on in the business. Um,
Can I ask a
but
question on that?
yeah, sure.
Yeah, so you mean that they should set up, let's assume they have an LLC, that they should be doing the S corp election and paying themselves a salary out of that LLC, so that then they can funnel. Well, I don't know if it's then they can funnel, but that way they can fund things like a solo 401k or a SEP IRA. Is that what you were saying?
Yeah, whatever structure it's gonna depend on what's best for that particular business. But what the end goal should be, you want to have some form of, whether it's a solo 401k, you're maybe the only person on salary or something like that in that instance, and you're contributing. I think the max for that is like you can do 22,500 personally, or maybe it's 23 this year. And then the business can contribute, like 43,500 to a solo 401k. Right. So it's like, my objective in saying that is, and maybe you can relate to this, Brian. I know other entrepreneurs I've talked to can, is they think back to when they started their business and they said, well, if all I would have done was actually set up some sort of business, personal retirement type situation and max that out every single year, instead of hoping for that big hit to sell, I would
Mm-hmm.
be in a tremendously different financial position. Because think about it for a moment, right? If you're a business owner and you're contributing combined between personal and business, call it $68,000 a year to that, if all you did was that for 10 years, you're going to have a pretty solid retirement in and of itself, right? You look at
Mm-hmm.
what a Roth IRA, I think is now, I don't know the exact number, I think it's 7,000 or something like that if you're under 50 per year. But that in and of itself is a huge win. So figuring that out, I think, is important. Also, for certain individuals, it could be beneficial because you're sort of forcing yourself to actually save and invest, right? And again, amateur investors who want to spend zero time learning about the markets should probably follow advice from someone like Warren Buffett and just buy the index, right? And there's many ways that you can buy different indexes, and having different diversification is probably a good idea. But that would be a place to start. I think then think about your actual objective and end goal. This is always the most important thing. What do you want to accomplish, right? For me, my objective is to create that continued growing income stream that's safe, secure, stable, that helps me sleep incredibly well at night, right? Do I need that income stream now? No. So I'm still investing for income. I have a sort of waiting for growth, and I'm still reinvesting those dividends. So I'm wanting share price appreciation and income growth. But as I get older and older and older, that rotation may change a little bit, right? Or as I maybe start to liquidate some of my asymmetric bets, how I redeploy that capital might be different a bit. But it all comes into kind of a written plan. I'm a very text and paper person. Like literally right next to here, I have three different notebooks that serve three different purposes. And so I write in these a lot, but I have a written plan that I follow. And here's the greatest advice I can give somebody is you don't have to figure it all out up front, right? If you want to be an income investor, go buy one share of an income stock you like. Maybe it's Exxon, maybe it's Coca-Cola, maybe it's Apple, maybe it's Merck, whatever. And just know that it's little by little the bird builds his nest. You're going to learn so much more by doing and practicing and studying than just sitting here trying to read and understand and go, oh well, what's the forward PE ratio, what's this, what's their earnings, this, all these sort of things. So some of that matters, right? Some of it might not for your style and temperament, but you have to take some little bit of action moving forward. So don't get caught in the sort of analysis by paralysis. Or what is that? Paralysis by analysis.
And
So,
yeah. But I think it's also key to know your style and your temperament.
yeah, exactly. And I think, again, try to really know it, right? Because, again, I think if you're a serial entrepreneur who's starting new things all the time, and you know that maybe your income or your just liquidity events are, again, lumpy, then if you invest for income and you use some of that money, those big liquidity events to create income, then it's far more smoothed out, right?
Mm.
And that can make your life a lot more easy, And again, think about, if you have children, there's all sorts of things that you can do. Think about, tax efficiency and stuff like that. There's so many things that can come into play, and at the end of the day, it can become daunting for a lot of people. But again, I just can't emphasize enough the action over sort of over analyzing is critical, and
Because you get
just
the
taking,
benefit of time. Sorry. Like, yeah,
yeah,
that's,
it's just like little steps moving forward, and you can even go back through. I remember at one point, to go back to John Reese's story, thinking, how do people get in massive credit card debt, right? And I had a business that I started when I was in college. It was successful. I was doing well, and then the business blew up. The payment processor completely screwed me, stole money out of my account. They ended up being big lawsuits, class action against them. I went from having a successful business to basically my two credit cards that I had, which had small limits on them, like $1,800 and $3,400, both had double the limit because of the money that was being sent to them never got processed because the money was no longer in my account. And I was in a really tricky situation. Thankfully, I
tricky.
got my yeah, I got myself out of it, but it was a dramatic swing. But I think about people who get into these situations and then they just sort of defer. I don't want to look at it. I don't want to think about it. Same thing happened. I got out of college and I looked at my student loan balance and I was mortified. I had studied abroad a little bit. I had went to a private college initially, then I transferred. I had taken extra classes in the summer just kind of for shits and giggles because I was interested in random topics. And then all of a sudden I realized, like, wow, I've got like $50,000 plus in student loans. Did I want to have those forever? No, because I read stories of people that realized they're paying interest for 15 years and they barely paid any principal. So I built a plan, paid them off in a couple years, and it was done. So again, my point is sort of sharing that kind of stuff is if you don't know, right, what the situation is like, how can you build a plan to move forward, right? If you don't know your end objective, in that case, paying off a student loan or building a passive income stream, how are you going to find your way to it? You don't maybe need to know all the information up front. Just having the goal and the objective, you often find yourself being led that direction, and people
Mm-hmm.
pop up into your lives for that. I kind of made this commitment of bringing myself out there more, talking more about this stuff, and
Mm-hmm.
out of nowhere, you reached out and asked if I wanted to be on your podcast, right? Like that's how life works.
Funny. You have a tremendous amount of self discipline. Yeah,
Maybe.
really. Yeah, yeah, I think so. Like, what is that? What do you attribute that to?
Mm, I don't know. Did sports, so I was in gymnastics and other sports, and did martial arts, and kind of a lot of things that require discipline. I think growing up, some of my heroes were, I had a long lineage of family members, that lived in Europe as well as the U.S. that were military folks. So there's obviously that component of discipline. A lot of my heroes growing up, in the '80s, you're thinking of like the Stallones, the Schwarzeneggers, the Van Dams, and stuff like that. They all had this sort of
Michael Jordan.
Jordan. Yeah, I grew up in Chicago, going to Bulls games. Like they had this, just air about them, this presence of discipline. And you watch any of those kind of old action movies, and it was always the leading star had this incredible discipline of like either getting back in shape, training for a fight, or avenging their mentor or something. So maybe that's where it stems from, but I don't know.
Hmm.
There are days where I feel like I have discipline, there's days that I feel like I don't.
But
So,
so many of your stories, they have a thread of like, I made a plan and then I executed on it. I took an honest assessment of where I was at. And
yeah.
I'm paraphrasing obviously your story about John Reese, which wasn't you, but like I looked at it, got a clear vision of what it was and what it wasn't, and then I decided I was going to make a change. Right? That takes it takes honesty and it takes discipline. So I think yeah, definitely two traits to admire. So cool. Thank you, Ryan.
Awesome. Well, thanks for having me.
Yeah, we will put into the show notes these different links, and when you decide to, let's say, turn on the marketing funnel, would happily contribute a little bit and try to get the name out there.
Awesome. I appreciate it, man.
All right, cool. I'll talk with you
Cool.
later.
Thanks for having me.